On Business Incorporated today, OPEC Fund signs $80 million loan agreement with Afrexim Bank for regional integration. Budget airlines cancel flights to Morocco. AFCFTA dominates conversations at African Economic Conference, Day 2. And the President Muhammadu Buhari, has arrived in Dubai for the Expo. It's the 2021 Expo, which is holding in Dubai. And one of the highlights of the celebration is the National Day. Nigerians who are gathered there have come together to portray and celebrate the culture of Nigeria. And the president just arrived some minutes ago to join Nigerians there for the National Day celebration at Expo Dubai. We'll certainly have more details from the president's visit to the Expo in Dubai in our subsequent broadcast here on Channels Television. Meanwhile, let's head to the market here on Business Incorporated. In Africa, sentiment in major markets at intraday was mostly negative, with Nigeria's NGX remaining unchanged from yesterday. South Africa countered that sentiment with a 0.25% gain at intraday, while traders at EJX 30 of Egypt displayed negative sentiment. The market shed almost 1% as intraday. In Nairobi Stock Exchange, which has figures from yesterday, Thursday, it shed over 0.5% as at the end of trading. In the Middle East, a great way to end the week as all major markets closed in the green on Thursday, which is their final trading day for the week. Abu Dhabi index was up almost 1%, while Dubai's index was also positive, but just 0.5%. Still within the region, Saudi Arabia added much lower, just about 0.3%, while the Qatar index was up 0.44%. Well, volatile is one word that could be used to describe the markets this week. In Europe, European stocks were up today after Thursday's downward trend. Omicron, oil, inflation, well, just what has eased investors' concerns today. Let's find out as we have Chiponda joining us now from Berlin. Hello, Chiponda. Good afternoon.
Yeah. Good afternoon, Ini.
So, Germany has imposed more restrictions on unvaccinated people in the country to help fight the fourth wave of coronavirus. What could that mean for the economy?
Well, in terms of the German economy, of course, we know that the restrictions that we've had already have impacted, for instance, the retail business. And what we have with the new restrictions is the fact that people who are unvaccinated are pretty much not allowed to have much of a social life anymore, even to go shopping. The only thing that they are really allowed to do is buy groceries and maybe go to a pharmacy. So only the essential kind of shopping and retail activity is what they can do. And that, of course, will impact retail business, because, of course, we know that, for instance, foot traffic in stores in retail was down 40% in November in comparison to pre-pandemic times. And that is something to obviously be concerned about. And retail associations and, of course, tourism industry here in Germany, they're warning that they will really suffer from some of the restrictions we are seeing. But of course, their arguments are sort of falling on deaf ears because, of course, Germany has a COVID surge and it's been struggling to deal with the fourth wave of the coronavirus. The levels of COVID infections have remained stubbornly high in recent weeks. And of course, we're still seeing patients being airlifted from one part of the country to the next. So there is a lot to be concerned about. But of course, these restrictions, travel restrictions, and of course, restrictions to maintain, to reduce contact between unvaccinated and vaccinated people, and also, of course, to not allow unvaccinated people to do much, that is, of course, a huge concern for business here.
But we do see that there's been an ease of concern by some investors.
Yes, of course, the oil decision from OPEC Plus, so the OPEC producers, or oil producing countries, and of course Russia, they've decided that they will continue with their plan to raise supply. And that was a bit of a surprise because, of course, we have two things that have sort of made market observers expect OPEC to do otherwise, and that is the fact that we have this Omicron variant, which of course has led to travel restrictions, which in turn will reduce demand for oil. So that was one thing that was speaking against that decision. And then the other thing was, of course, the fact that the United States plans to release 50 million barrels of its oil reserves to help tame oil prices. So the fact that the oil producing nations decided to keep up with those plans to raise oil supply is quite interesting. I mean, they left the door open to maybe change their decision, but at least right now it looks like the oil price may not go as high as was initially thought. And if that is the case, that could help manufacturing prices in Europe, for instance. And of course, consumer prices will also be impacted by that. So that is actually welcome news for now, and that could have been helping the market today.
Oh, okay. So what should investors be watching out for next week?
Well, here in Germany, the big highlight will come on Friday, and that will be the IPO of the truck division of Daimler. So Daimler, Germany's second biggest car maker, its truck division is going to IPO as Daimler Truck on the Frankfurt Stock Exchange on December the 10th, and that will be closely watched because, of course, a lot of analysts are also saying that that could join Germany's blue chip index next year, which is, of course, the most valued companies here in Germany. So apart from that, we'll also have U.S. inflation figures coming in on Friday. And of course, you know, inflation has been the story, not just in the US, but also in the EU. And that will be watched closely by investors because, of course, if it goes up from around 6% where it was in October, if it's higher in November, it will be interesting to see how the US Fed plans to respond to that. We also have an EU finance ministers meeting on Tuesday, and also EU GDP figures for the third quarter of this year. And so all of that is on the agenda, and it will be interesting to see what actually moves markets, because of course it seems the markets are very sensitive. And of course we still have that Omicron variant to worry about, so we'll be watching developments there as well.
All right, Chipanda, thank you so much for the updates. Obviously, a whole lot to look out for next week, and we'll be here to give the details. Enjoy your weekend.
Likewise, Inni.
Well, so we, at the beginning of the program, told you about the Expo in Dubai, and the President Muhammadu Buhari, is there joining Nigerians to celebrate the National Day. Let's hear him speak at the event.
In the world at large, ladies and gentlemen, let me start by expressing my sincere personal gratitude and appreciation to His Highness Sheikh Khalifa bin Zayed Al Nahyan, President of the United Arab Emirates, for inviting me to Dubai Expo 2020, and especially to attend Nigeria's Day event, which offers my country great opportunity to showcase our potentials. Nigeria is profoundly grateful to the United Arab Emirates for offering us free pavilion, which we intend to make full use of as we also strive to enhance relations between Nigeria and UAE. The Expo Dubai 2020 is by all measures the single most important global event of its kind to take place in the Middle East, Africa, and the Southeast Asian regions in recent years. We are proud to be a part of this dynamic evolution of pragmatic partnership that are both creative and innovative for the progress of the country. I heartily congratulate the UAE authorities for the painstaking work to create this state-of-the-art complex that has connected our world within our fingertips as we share international best practices as well as opportunities that abound in all our countries. The theme of the Expo, connecting the minds and creating the future, is apt as it challenges us all to work for the future we want. I congratulate the EU authorities and the people for making all of us in these regions so proud for the facilities in this magnificent complex. The Expo 2020, taking place in 2021, is a direct negative impact of the coronavirus pandemic, which unprecedentedly shut our world against ourselves for over 1 year. The concerted efforts by world leaders working together enabled us to limit the catastrophic consequences of this pandemic. Such level of continuing understanding and pragmatic partnerships are needed and must be reinforced to ensure that our world is a better place that addresses humanity's common challenges to guarantee sustainable development and progress for the global community.
Well, talking about conversations going on at the Dubai Expo, and one of the things that the president talked about is partnership by the world to handle global challenges, and we know top on that list, of course, is COVID-19. So Channels TV will bring you more information and more visuals from the visit of the president at the Expo in Dubai. Moving on now, November was a good month for the service sector, especially because of looser travel rules. But with the surge of Omicron, the data for December may not look so good. But we have Juliana joining us from London now to give us details of the performance of the service sector in November. Hello, Juliana. Good afternoon. So the service sector did well last month, but what are the specifics of the reports to start with?
Yeah, so the service sector PMI data is the most important set of data that the Bank of England and the Treasury look at because, of course, it contributes more than 80% of GDP. It actually came in at 58.5, which is better than the kind of long-running average of about 54.5, but it's still lower than the 3-month high of October of 59.1. And as you said, we are starting to slightly see momentum cooling off because there are fears about this new variant. There's data that's been released alongside the data from the Purchasing Managers Index from Open Table, which a lot of people use to book their tables when they're going into the hospitality sector in the UK. And they're showing that in the first week of December, bookings are just 5% of what they were pre-pandemic. Also, separately, Google Trends, which has a look at some of the keywords that people in the UK are looking for, names like gyms, restaurants, bookings, parties are all really down. So that's really worrying. There's been a lot of mixed messaging over the past couple of days, from the Conservative government. Boris Johnson, the Prime Minister, insists that Christmas parties should still go ahead as usual, whereas there are other very senior cabinet ministers and health officials within the UK asking people not to do so. So it is pretty worrying, especially because, of course, Q4 is a very, very important time for the UK to finally get back those GDP numbers, but we'll just have to wait and see.
Yeah, well, waiting and see is actually another thing with post-Brexit, as we hear of negotiations that are supposed to come on soon between the UK and EU's chief negotiators. What's that about? Do we have our ears to the ground as to some of the details of the conversation?
Oh yes, we can never get away from Brexit. Always got our ears to the ground there, Illy. And negotiations continue between Brexit Minister Lord Frost and the officials from Brussels. I think a spanner was put into the works, definitely as it pertains to Britain, because earlier this week, the Financial Times leaked a document from the US Trade Department, basically saying that if Britain dare try to go ahead and trigger Article 16, which could, in effect, derail the peace agreement, the pretty vital document that was forged by former Labour Prime Minister Tony Blair with the assistance of the then President Bill Clinton, because of Brexit. Now, there was strong reaction from Whitehall. They said that no matter what Washington say, we are going to go ahead with whatever serves our country best. But it's really important because we know that the withdrawal agreement has been up in the air for so long. Britain has threatened to go against international law by ripping up parts of the agreement. But what they may do, depending on what the outcome is of negotiations this week, is trigger Article 16, which would basically make the agreement no longer plausible, and that's because of the sea between the United Kingdom and the island of Ireland. Since checks have been pouring on goods between Northern Ireland and the rest of the UK, this is called friction. Northern Ireland feel they're no longer part of the UK. So that's the sticking point now. That's what negotiations are all about. And if Britain go too far, they are going to lose lots of respect, not only with their partners, former trade partners in the EU, but certainly with the US, and they really want that big trade deal.
All right, Juliana, we'll have to stop it there. Thank you so much. Enjoy your weekend.
Thank you. You too, Renee.
So we'll take a break, and after the break, we'll get updates from the African Economic Conference going on in Cape Verde. Yeah, welcome back. You're still watching Business Incorporated on Channels Television. Well, the African Economic Conference going on in the Republic of Cabo Verde enters day 2 already. There have been conversations on strengthening the financial system of Africa and, of course, implementing the outcome of preferred solutions at the conference. Another area of interest has been the African Continental Free Trade Area. Now we have the Strategic Advisor, Regional Bureau for Africa, UNDP, Dr. Joy Kategwenka, sharing, what they are having, the talks they are having about AFCFTA at the conference with us. Good to speak with you, Dr. Joy. Good afternoon.
Good afternoon. Thank you for having me.
So bringing us up to date on some of the things they're talking about there at AFCFTA concerning AFCFTA. How is it a game changer for the continent, for the African continent?
Thank you very much. The AFCFTA is a game changer for Africa in at least 3 ways. The first is that it brings an end to the trap of exporting raw materials. Most of the African countries are exporting their products mostly in the raw form, and that is the part that attracts the least value, because naturally it's about value addition, it's about diversification, it's about creating more wealth through an industrialization process. So by creating markets within the continent where tariffs are reduced and services are regulated in a manner that gives preferences to African services and service suppliers, you have the possibility to industrialize. The second thing is that the AFCFTA gives African exporters the chance to look at African countries as a viable proposition. That Ugandans can think of Senegal as a market is important. And so that is some of the critical areas. The third is the question of Made in Africa. The AFCFTA gives Made in Africa a chance. Most of African countries are net importers of all the products and the services that they consume. With the AFCFTA, we can push a Made in Africa revolution. And indeed, some of the research that UNDP and the AFCFTA Secretariat have just released show that there are critical markets in the futures report in automotives, in leather and leather products, in cocoa, in soya, in pharmaceuticals, a series of products. And so here we see that the Made in Africa revolution can indeed take off through the AFCFTA, creating jobs, raising incomes, creating prosperity in Africa.
Yeah, well, like you said, the issue of exporting raw materials is a major challenge. So talking about developing value chains along areas of comparative advantage, how can this influence economic development?
Value chains are critical. They are the gateway. into democratizing the One Africa market. This is precisely because you're not looking at producing the entire product. You're looking at parts of the product that you can position yourself as a country to be a part of. So think about the leather and leather products value chain, or think about the clothing and textile. There will be African countries that are excellent in producing the hide, for example. There will be others that can tan it. There will be others that can produce the bags, the chairs, etc. So the value chain approach is being proposed because it's precisely in there that you can promote the participation, especially of MSMEs, of small and medium-sized enterprises, and why not also for the informal sector. And so this approach, as revealed in the Futures Report 2021 of UNDP and the AFCFTA Secretariat, which is also being discussed at this conference, shows that indeed that is the way we can crowd in African exporters to be part of the One Africa market.
Well, the pandemic has changed a lot of things, has created new normals. How has it changed the AFCFTA?
The pandemic has increased the urgency to focus on made in Africa. If there is anything that became blatantly clear through the pandemic, it was that Africa must put a foot on the pedal on emphasizing industrialization, value addition of critical products like food, like vaccines, like pharmaceuticals, like PPE, etc., etc. And so in a sense, the pandemic has been positive for intra-African trade because it has accelerated the consciousness and the realization that we really have indeed to push for industrialization on the continent of Africa.
Well, thank you so much, Dr. Joy, for joining us this afternoon. And have a beautiful and, well, successful conversation there at Cape Verde.
Thank you so much for having me. Goodbye.
Yeah, bye. So moving on now, let's see what else is happening in Africa. OPEC Fund for International Development has signed an $80 million term loan agreement with the African Import-Export Bank to finance international trade activities directly among corporate or through financial intermediaries. The OPEC Fund's support will assist in boosting Afreximbank's liquidity to grow its loan portfolio as it finances exports and imports in critical sectors across Africa, such as agriculture, manufacturing, and healthcare. The African continent is still facing challenges in accessing trade finance when compared to other parts of the world. OPEC Fund's loan will help address some of these challenges, which are also impacted by COVID-19 pandemic. And in Nigeria, Afex Commodities Exchange Limited is raising as much as $100 million in 10-year debt this week to expand food production in Africa's most populous country. The money is aimed at improving food storage in Africa's most populous nation, with targets of raising rice, corn, and soy output by 3 million tons. Afex will invest the money raised on expanding storage capacity by at least 10% and financing farming on 250,000 hectares of land in 6 Nigerian cities, which include Kano, Kaduna, Oyo, Ogun, Cross River, and Abuja, which is the nation's capital. Part of the proceeds will also go into launching 4 warehouses with 100,000 tons of storage capacity next month, with a plan to increase the store locations to at least 10 in the next 2 to 3 years. This will bring facilities closer to farming communities and expand storage in the West African nation, which stores less than 5% of food produced, compared to South Africa, that keeps as much as 80%. And Ryanair, EasyJet, and Transavia will have cancelled all flights to Morocco until the first day of February next year. And this is because of lack of clarity of the Moroccan authorities. Ryanair attributed its action to Morocco's decision on the 28th of November to close its air borders for 2 weeks due to the new Omicron variant of COVID-19. And this, they say, has had an impact on 160,000 customers till date. The Irish company said due to the current climate of uncertainty, decided to cancel all flights in Morocco until next year, leaving suspended a further 230,000 passengers who had chosen Morocco as their destination. And that's it on the program for this week and today. Thank you so much for being a part of it. I'm Ini John Mekwa.